classification, how to claim classification, how to claim exemptions. Thank you very much, ladies and gentlemen.
Introduce CA Annapurna Kabra. Annapurna Kabra is a fellow member of Institute of Chartered Accountants of India. Is a graduate from Gulbarga University and completed her articleship under Rajkumar Anchal and Co. Chartered Accountants in Gulbarga. She has qualified the course of DSAR and done as conducted by the ICAI. She has contributed to the articles on VAT and is a regular contributor of articles to various professional journals including the KSCA journal. She has co-authored the book on Guide to VAT Audit and Value Added Tax in Karnataka. She has co-authored the book on VAT Audit for ICAI. She has also co-authored the background material of Indirect Tax of ICAI. She was a coordinator for Indirect Tax Certification course and Service Tax Workshop as conducted by ICAI. Apart from this, she has addressed the gathering of chartered accountants on indirect taxation matters in various forums. She is working with large corporate and firms in her capacity as a consultant and advisor for indirect taxes. Put your hands together to welcome Annapurna Madam. Thank you.
Good morning. Good morning.
Good morning.
So first of all, I thank Hiregange Academy for giving me an opportunity to share on this topic, transitional provision. Actually, if you look this topic, it is not only a procedural topic, it is also equally technical topic. So today I will not much concentrate on procedural. I will be taking a combination of both technical as well as practical approach for this transitional form, because still it is not yet activated in the portal. It's only the form which is released, it is only the sections which are released, but the form portal is not ready for this. So before getting ready into this portal, we will see what are the practical issues we are going to have with this transition. So before going into this topic, let me give you some highlights on this last 1 month experience on GST. We all are sitting on the same sail. We all are experiencing this GST law from last 1 month, and it looks to be like it is a mixed response from the trade and industry and the professionals. It is giving a mixed response, as some of them are quite happy with this, some of them are quite comfortable to comply with this law, and some of them are not comfortable to comply with this law, because morning we were seeing on this classification topic. Still we are learning on this classification rules. Just imagine, already we have crossed 1 month. And we have already charged the taxes to our customers or to our recipients, but still we have to understand whether we are going on the right direction or whether we are approaching to this GST. So before looking into this GST, this transitional provision is the way you should know the old law also and you should know the new law. That is what the transition law to do. So already we have crossed 1 month, we are left only with next, I can say only next 60 days approximately. We are having 60 days to file these transitional forms, because here the law has said that you have to file all this credit by 90 days from the appointed date. So already appointed day is on July 1st, already 35 days, today is already 3rd, so approximately 33 days are already gone on this. Still the portal is not ready to file this transitional forms. So I don't know, it might get extended also, but let us assume today that it is for 90 days. The second is, this transitional, it is not only the stakeholders who is working on this. Equally, the government is also working on this transitional provisions. It is not only we professionals are working or the trade or industry is working. Equally, the government is working on this transitional provision. How the government is working on this transitional provision? It is that the government is trying to understand what are the kind of transitional credit that the dealer or the supplier can take this credit in the GST law. There are many sections, many content in this form which are missed out. And if you look into the latest form which they have added some more columns in that. So don't follow the old form. You have to follow the latest form which is there in the rules as is notified. So just don't go through the old. Whatever I told till now, was it audible? Yes. No issues. Can you just take that balance amount from the customers now? Or is it that you are going to pay to the government now, from your pocket? Last 1 month already you have collected 5%. Today it was analyzed that it is at 12%. So already you have collected only 5%. What in case for 1 month, last 1 month, is it that you are going to collect the differential taxes from your customer, or is it that you are going to pay from your pocket? What you are going to do? If you are able to identify your customer, definitely you would like to collect from your customer, otherwise you have to pay from your pocket. Similarly, in the transitional provision also, you have to analyze, though it looks to be that credit is there, you have to analyze whether you are eligible for that credit. Government has not given very widely saying that, okay, whatever the credit you are having in your books, please take it to the GST law. No, it has not come out with that way. This transitional credit is with lot of conditions, with lot of eligibility and ineligibility, with lot of documentations, with lot of procedures, and with lot of information they require for claiming this transitional credit. So let us keep in our mind that whatever the credit we had in the old law, it is not that all credits will be eligible under the GST law. They have attached lot of conditions to this. So before claiming this transitional credit, we have to understand the conditions, and then only we can take this credit. Basically, if you look section 141, that is what we have to understand. So before this migration to existing taxpayer, the issue is, in case if I am migrated to GST law, then only I can apply for transition, or is it that if I am making a new application for registration, I can go for transitional credit? Is it that? Please understand, if you are only migrated from the old law to the new law, you are eligible for transitional credit. Not for the dealers, not for the suppliers who have applied freshly for this registrations are not eligible for transitional credit unless there is a specific section for that. Please understand. The third condition is that there are many instances where they are not able to migrate because of some technical reason. Yes? Because of some technical reasons you are not able to migrate. So in that case, when you have approached to the department had stated that, okay, you apply for fresh registration with the same informations. So when you are applying for the fresh registrations for the same number, can you go for transitional credit? Because of some technical difficulties, we are not able to migrate it. So can I still apply for transitional credit? Yes, I believe, yes. Yes, madam? No, that is fine. Old registration number will remain it. My issue is, many instances it is happening that you are not able to migrate, you are not able to get your provisional registration number. In that case also you can still apply for transitional credit once you get your provisional registration number. The fourth issue is, can I apply only based on my provisional registration number, or should I wait for my final registration number? Please understand, whatever the registration number you have got, that is your provisional registration number. You have to get your final registration number with the certificate REG 6. So that 3 months time they have given, so within the 3 months time, more or less your registration number will remain same, that is what we believe. But you have to get your final certificate number within 3 months from the appointed day. So there is a specific procedure for that. Now going to this procedural part, they are saying that Rule 117 is very clearly saying that you can carry forward all your taxes. What is this taxes we are having today? We are having VAT taxes, we are having service tax, we are having excise duty. Credit carried forward under the existing law or on the goods held in stock on the appointed day. What does it mean? It means there is a possibility that you are carry forwarding your credit but you are not having the stock. The second instance is you are having the stock but you are not having the credit in your returns. There are many instances where you will find. What are those instances where you are having a credit but you are not having the stock? What are those possibilities? One is, for example, if you are purchased at 14.5, I'll give you a very simple example. If you are purchased at 14.5 under the state VAT law, and if you are making a interstate sales against 2%, you are having a credit of still 12.5%. Are you having the stock with you? You are not having any stock with you. You purchased at 14.5, you have already sold against 2%. It means still you are having a credit of 12.5%. In these circumstances, you are having the credit but you are not having the stock. This is the one case. The second case is, you are having the stock but you are not having the credit. What can be the possibility? What can be the possibility where you are having a stock but you are not having a credit. What are those circumstances? Where you would have already utilized that credit against the sales. Your margins are high. When your margins are high, your output tax is high. So already you have utilized all your input tax credit against the output tax payable. So in that circumstances, you are having the stock but you are not having the credit. So in these circumstances, which credit I should take in my transitional form? Which credit I should show in my transitional form? Please understand, this transitional form is an intimation or an application. Is it only an intimation which you are giving to the department saying that yes, this is the credit I am having of the old law, or this is an application you are making to the department, how we are making a refund application? Is it an application which you are making to the department that yes, we are eligible for this credit? It is a application and it is not a intimation. So definitely you believe that after you apply for this transitional credit, definitely it will be assessed by the officers. It will be again assessed by the officers. So you have to be very careful when you are going to apply for this transitional credit. Now every one of you might be having a doubt. Madam, we had a credit on 30th June. Yes. Now we all have to file the return for July month. We have to file by August 20th. I have credit on 30th June. Can I set off for the month of July? Because July I am having a liability of say 5 lakhs. And on 30th June I am having a credit of 2 lakhs. Can I set off by paying while I am paying that liability for July month, July 2017? Because that credit is under the old law and this liability is under the new law. So can I set up that 30th June credit against the liability of July 2017? Because we all have to file our returns. Already August 20th is the last date to file our return for month of July. Can I set up that credit? Actually the law would have given, yes, provisionally you set up so that you don't have had cash flow issues or fund flow issues. But the law has not stated that. The law is very clear that you first file your transitional forms. This transitional credit will go and sit in your electronic credit ledger. Only after that you can adjust against your liabilities. So everybody, whoever is having a credit on 30th June, they can't adjust immediately for the month of July 2017. And on that, first of all, we have to file this transitional form. Only after filing this transitional form, you can set up that credit against your liabilities. So if that's the reason, if you would have seen in June, many of them were reducing their stocks. Many of them were reducing the stock. They were selling at discounts. They were selling with lot of offers. Why? Because they knew that they cannot set up their credit against the liability in the July or August until you file your transitional forms. Today I am ready with all my transitional credit details. I am ready today. Today I am ready with all my transitional credit details. But where is the form to file? Still it is not activated on the portals. So until it is not activated on the portal, I cannot file my credit. I cannot set off my credit against the liability of July 2017. So temporarily for July, August we have to wait, file this transitional form, then only you are going to get a credit. Now second issue is, can I revise my transitional forms? I filed my transitional forms, yes. I filed already my transitional forms saying that yes, my credit is say 10 lakhs. I have already filed. Assume that tomorrow the portal will be open. I have filed my credit of 10 lakhs. Later on in September I came to know, no, I made some mistakes in my transitional credit. So it is not 10 lakh, it is 15 lakhs. Or it is 5 lakhs. There is no provision for that. Please understand. There is no provision for revision of your transitional form till today. Not even in the rules, not even in your section. So we all have to be very careful, very diligent when you are going to file these transition forms. Don't file in hurry burry, please don't do that. It's okay if we wait for another 1 month, but it has to be accurate and it has to be more, because this will be again verified by the officers. And the third important point is, don't file these transitional forms only to file it. You have to first decide whether I should get this, am I eligible for this transition credit? That is the first criteria. Second thing is, in some of the sections they have stated that what are this transitional credit you are going to enjoy, it has to be passed on to your buyers. I think we all are aware of this anti-profit ring. Yes, some of them are aware that in anti-profiteering case, we have to pass on our credit to our buyer by reducing the prices. So in that circumstance, please understand, it need not be that all your transitional credit should be with your anti-profiteering provisions. No, only there is some provision. I will show you when I am going in this section. Only in that case it is required that you have to pass on to your buyer. Yes. So with this background, let us understand what is there in the law. Let us understand what the law requires. Let us understand what the form requires, and let us see how to handle certain practical issues for this. So in a different scenario, how are we going to fill this transition forms? Before going into this section, I thought I'll mention the rule. Why? Because the rule says that every registered person is entitled to take credit. It means you should be a registered person even under the GST law. If you are not a registered person in the GST law, you are not at all entitled for credit. They are saying you are entitled for credit under section 141 within 90 days from 1st July 2017. So we all have to submit a form called as GST Trans 1. So that is the one GST Trans 1 form which we all have to file within 90 days from the appointed date. So approximately it will be September somewhere 27 or 28 where we are supposed to file this Trans 1. It shall be duly signed and submitted on the common portal. Is it that I should get certified from the professionals? Not required. As a dealer also you can apply, or as a professional also you can apply. It specifies a specific input tax credit as eligible duties and taxes. So don't take all your credits. They are specified which are the taxes you are eligible for credit. For example, if I am doing any interstate purchase, I am having a CST tax. Yes, I was having a CST tax in the old law. Can I take that as a transitional credit? No. Why? Because it is not at all your credit which was there in the old law. So when it is not a credit in the old law, you cannot carry forward saying that it is a new law. I will take all the taxes which are there in the old law. Possibly you will have some luxury tax also. If you are going a hotel, if you are going for lodging, they are charging you both luxury tax as well as service tax. Is it that I can take both? Though all your taxes were there as a cost earlier, you cannot take those taxes even under the GST law. So it should be your eligible taxes and duties. Your eligible duties can be your excise duty credit or your service tax or all your VAT, CDD, SAD as may be specified. And for EOU and your electronic hardware technology part, they said it can be allowed as may be specified. Now let us see what is the law requires for this. Law is saying that you carry forward, but what the law is saying, it should be carried forward in your return. Very important. If you have not filed your return, if you have just filed your Trans 1, that will not suffice. So you have to file your returns for last 6 months. Which are the returns generally we file under the GST, under the old law? One is service tax return, another is VAT return, and another is excise return. So all these returns have to be filed to claim your credit. If you are not filed your return for last 6 months, you are not eligible for credit. What in case I am not filed till from 2016 till June 2017, but I filed in June 2017 for last 1.5 years. Can I take the credit? I have not filed my return from Jan 2016 to May 2017. I filed the return only for June 2017. Am I eligible for credit?
No.
The law very clearly says that you have to file your last 6 months credit. But in case if you have not filed it, at least file in June and take the credit. We will see what will be the consequences. Though the law is saying last 6 months returns to be filed, but at least file for the month of June and claim your credit. It should not be admissible under the GST law. What does it mean? Whenever you are going to carry forward your credit, you should also see that it is eligible under the GST law. If it is not eligible under the GST law, it is blocked. It is said that no, you are not eligible for this kind of items. Then in that case, you cannot enjoy that credit as a transitional credit. So friends, we have to understand that when you are going to look this transitional credit, you should also see the eligibility under the old law and eligibility law under the new law. So that is under the GST law. So if it is restricted in the GST law, you cannot enjoy the credit. So this is very important for Trans 1. This information has to be stated in table 5A. We will come to that form later, but this is the information which is required in table 5A. Now the next issue is unavailed credit on capital goods. What is the definition of capital goods in the GST law? Capital goods are those which is capitalized in the books of accounts in the GST law. These capital goods we have to look from the GST law definition or from the Senvat credit definition? We have to look from Senvat credit definitions. Please understand. You are getting that? Because on those capital goods I have enjoyed the 50% credit in the old year, so the balance credit can be carried forward in your transitional credit. Why this is separately classified? Why this is separately classified in 142? Because in your returns you will have all your credits. In your returns you will have all your credits on your inputs, input services as well as capital goods. Here why they have come separately? Because this is an unavailed credit on your capital goods which you cannot enjoy, which you are not able to enjoy in the old law. Now let us take this practical scenario. I'll just tell you the practical scenario for capital goods. 16-17 you enjoyed 50% credit. Let us assume you purchased a machinery for 10 lakhs. On that, let us assume 1 lakh was your taxes. 50,000 you enjoyed in 2016-17. Now balance 50,000 are you, if you have enjoyed from April to June, is it that again you have to carry forward? What the law is saying, 50% you enjoy in the old for the first year, balance 50% credit you can take it in the next year. So balance 50% if you have not taken for April to June 2017, then only you can carry forward in the transitional credit forms. If that balance 50% if you have already utilized for April to June 2017, then you cannot enjoy it. That is there in the Senvat credit rules. Now let us come for the GST law. Let us understand for the GST law. Once this unavailed capital goods credit I have taken as my eligible credit, when I am looking this VAT law, I am linking the GST law with the VAT law. In VAT law, what is the law is that, for example, I purchased a machinery of say 1 crore. I paid VAT of 14.5. So let us assume 1,45,000 I paid as a VAT credit. What the law is saying, you are not eligible to take credit on your capital goods unless you are commencing your production or unless you are making the sale of your taxable goods. So if I have invested, say, let us assume in the month of June 2017, can I take it as an unavailed credit in the month of July as a transitional credit? Yes or no? Because this is not disclosed in my return, because still I am not eligible for credit. So this is not disclosed in my return. So in that scenario also you can take under Rule 117 saying that yes, unavailed credit on capital goods you can enjoy the credit. But the most difficult is if you are a composition dealer, you cannot enjoy this credit. That would have been a very bad planning if you would have invested in capital goods in last 2-3 months, and if you are a composition dealer, you wouldn't enjoy this credit in the GST law. Any doubt if you have in between, please you can ask it. Even this credit is to be filed in trans 1 only. So all your credit will be going to your trans 1. What is the law saying that the amount of tax or duty availed or utilized by way of input tax credit under the earlier law till 1st July, the amount of duty yet to be availed or utilized. It means what? You should give the information here how much credit you have already utilized under the old law and how much credit you are going to carry forward in the GST law. I'll give you one more example. Last year I purchased a machinery of 1 crore. 10 lakh is my credit. I have not availed. I missed out. I missed out in the first year because law says 50% in the first year, 50% in the second year. I missed out for 16-17. Can I take it now? Can I take it now? Yes. Because law is saying what is unavailed credit? Unavailed credit is a credit which you have not availed in the earlier law. So if you have not availed that credit, kindly apply for the transitional credit. Don't apply only 50%. Apply only 100%.
By oversight, the return will be told.
Yes, sir.
By oversight, the return will be told.
We'll see that all those later. At the end, we'll see. Oversight, we'll see later. First, we'll see what is there in the law. So this is the requirement of the law. So please understand, if you have missed out anything in your last year, at least try to apply for this transitional credit. Though there is no specific provision, but looking into the definition of unavailed credit. Yes, sir. Yes, you revise the returns, no issues. You revise your old return. That's what I am saying. Very important is please relook your last 6 months returns. Please do relook. If you can revise it and take the credit, or you can take it in the transitional form itself. So you have the options. Either revise your returns or take it as your transitional credit. Yes, sir?
In case of service industry, see, we used to spend money towards input, VAT input. We have paid, there is no output VAT liability for us because we are a service industry. So the suppose working process is there for the future years, and the input tax is there, VAT input. Whether that can be part of a trans now?
Now his issue is, if I am a service provider and I am having a VAT credit, can I set off as a transition credit? What is the answer? No, you cannot enjoy that credit because you were not eligible as credit under your old law. You cannot enjoy your credit if you are a service. For example, if I am a chartered accountant, if I would have bought certain, say 20 to 30 laptops I would have purchased and I would have paid VAT on that, then in that case you cannot enjoy that credit of VAT whatever I have paid because I was a service provider and I was not eligible for credit of VAT.
If the VAT is part of the services going to be provided under GST regime. So what
Irrespective of, though it is, please understand this activity what I am going to do as a taxable also in the GST law, but as a chartered accountant, if I would have invested and I would have paid VAT on that, you cannot enjoy this VAT credit as your transition credit. That is specifically restricted in the GST law. You cannot enjoy that credit. That's why I told in the beginning, you cannot enjoy those CST taxes, you cannot enjoy those luxury taxes, you cannot enjoy the entertainment taxes, though you would have been paid and it is a part of your cost. Yes, only which you were eligible under the old law. If you look old model of GST, they have put both the condition that it should be eligible under the old law, it should be eligible under the GST law. But if you look the latest provision, they said it should be eligible under the GST law. Still, it's that eligibility will play a very important role when you are going to take a credit. This is the most important. Here also you have to refer to table 6A. Yes, sir.
Service tax paid in excess of what is supposed to be paid. Because of some circumstances, we have cancelled the event. But whatever advances we have received,
We'll come to that, sir. We have a special provision for that. We'll come to that. Definitely we'll come to that advances. We have a specific section for that. So basically let us understand this credit has to be given in your table 6 of your trans 1. And please understand this credit can be claimed by all the registered person except composition dealers under the GST law. So if you have applied for composition under the GST law, you cannot apply for this transitional credit. Who are the composition suppliers in the GST law? One is the traders, one is the manufacturers, notified manufacturers, or a service provider as a restaurants whose aggregate turnover is not exceeding 75 lakhs. So if they have applied for this, then they cannot take the credit. Now some of the industries are having the issues on this composition. What has happened is, for example, I have applied for composition on 1st July 2017. Please understand, I have applied for composition scheme on 1st July 2017. I was a regular dealer under the old law. Yes. So what the law says, if you are under the regular dealer under the old law and if you are a composition dealer in the new law, you cannot carry forward your credit because that is a restriction we are having, saying that if you are a composition dealer under the new law, you cannot enjoy your credit. Now the issue, practical issue what we are having today is for this composition dealer, there is, I think many of you would have heard on this issue saying that I am going to carry forward this stock from old regime to the new regime. Yes, I would have paid the taxes in the old law. You are getting that? I was a regular dealer in the old law, I am a composition dealer in the new law. As a composition dealer, you cannot enjoy any of your credits in the GST law. But you would have already had a stock on say 30th June 2017. Again that stock you would be having certain credits. Let us assume this credit is already exhausted. You would have already used that credit for your taxable supplies when you were under the regular scheme in the old law. Yes? You are getting that? Now, when you are going to apply for this composition scheme in the GST law, there is a message saying that you should pay the tax to the equivalent of the credit what you would have enjoyed in the old law. Technically I agree, yes, because when you are going to come to this composition scheme, you are not eligible for that credit. Why? Because once you are under this scheme, you cannot enjoy that credit. But that credit is already exhausted under the regular scheme. You are getting it? I have already exhausted against my output tax in the old law. Now should I pay the taxes in the new law? Should I pay that credit which I have already enjoyed in the old law? I am having the stock, but the credit is already utilized against my output tax payable in the old law. There is no clarification yet on this. There is no section also for this. There is no clarity on this. So till that time, what we believe is that until a clarification is coming on that, you don't pay the taxes on those stock unless there is a specific clarification for that.
What about CMP 03 which talks about this?
CMP 3, yeah, that is when you are changing your schemes in the GST law itself. See, in CMP 1, 2, 3, CMP 1 is for migration, yes? CMP 2 is when you are applying for scheme. CMP 3 is ITC, they are talking on input tax credit when you are under the GST law and when you are going to change from regular scheme to the composition scheme.
If you look at the heading given in CMP 03, it is clearly specified that from those persons migrated from the existing.
Correct, but they have not said you to pay the taxes. They are only saying whatever the credit you are having, that should be disclosed in your the ITC 3.
But there is table which says debit entry.
Correct, but they are not asking you to pay. Where is the section for that? Only in the form that content is added, please understand. Only in that form the content is added, but there is no specific provision or section which is saying that you should pay the taxes equivalent to your credit what you would have utilized in the old law.
Rule 3.4 ಹೇಳಿದ್ರು.
No, Rule 3.4 is talking when you are under the GST law. Rule 3.4 is not talking for when you are under the old law and under the new law. Please understand, don't get confused with that. Whatever the scheme they have given in the composition rules, that is, they have given one is for the migration and second is when you are under the respective scheme as a composition scheme and a regular scheme in the GST law itself.
So we cannot extend section 18 to that.
We cannot do so. We cannot, because this is all section 19 of the VAT Act. They have not said under the VAT Act also, not even they have said under the GST Act. Though the form requires that, but there is no specific clarification. Possibly we might get a clarification for this, but as of today we don't have clarification. Now next is, this is the most important part of this law. Everybody is working on this transitional credit. Duty or credit carry forward under any existing law or on goods held in stock on the appointed day. Let us read 143. This is one of the most important section of transitional credit. What is that? Credit of eligible duties and taxes in respect of inputs held in stock to be allowed in certain situations. They said, okay, you were not registered under the old law. Let us assume. For example, textiles, let us say, you were not liable to be registered under the old law, but you are liable to be registered under the new law. Yes? So what the law is saying, in case you were not liable to be registered under the old law, or if you are dealing in exempted goods, or if you are dealing in any exempted services, even then whatever the credit you are having in your stock, that can be taken as a transition credit. You all understood? You were exempted under the old law, yes? You were not liable to be registered under the old law, or you were dealing in exempted services, or you were dealing in exempted goods. So in that circumstances, the law has said, okay, you can enjoy the credit on your stock. Now the problem is, for example, I take a simple example. For example, I am a chartered accountant. I was doing certain services before affiliate authority. Let us assume that it was exempted under the service tax law. Now as a service provider, I am liable to be taxed in the GST law. I had certain credits, input tax credit under my old law. Can I carry forward that credit? Can I carry forward that credit? No. The law is saying you are only going to get credit of your stock. You are not going to get credit of your input services. You are not going to get credit of your capital goods. You are getting what I am saying? Here this 140 subsection 3 is talking only for credit of inputs in stock. It can be your raw material, semi-finished goods or under the old law, but which are liable to be taxed in the GST law. You can take the credit only on stock. You getting? So don't take the credit on capital goods, don't take the credit on your input services for 140 subsection 3. Now to take this credit, what are the conditions? Now let us see who all are eligible for this. Who all are eligible for this? One is who is exclusively, it is not liable to be registered under the existing law. What is existing law? It is GST law or in the old law? Erstwhile law. It is your erstwhile law. Or exclusively engaged in the manufacture of exempted goods, that is also under the erstwhile law. Or exclusively engaged in the provision of exempted services, or providing works contract services and was availing the benefit of service tax notification. Why this works contract service also they brought here? See, in works contract we were opting for two options. One is you can either go with the valuation mechanism or you can go with the abatement mechanism. What was the condition there? That you cannot enjoy the credit on your inputs. You are getting that? You cannot enjoy the credit on your inputs either under the excise duty credit on your inputs, whether you are following 40% valuation rules or you are following 30% abatement. What they are saying, even those works contractor also can enjoy the credit on their inputs if it is there in your stock. Okay? So this is what they are saying. Then first stage dealer can enjoy the credit, second stage dealer can also enjoy the credit, registered importer can also enjoy the credit, depot of a manufacturer, or exclusively engaged in the supply of exempted goods, that is for SGST Act. So all this you have to understand that they were not liable to be registered under the old law, but they are liable to be registered under the new law. That is the first scenario. Second scenario is first stage dealer, second stage dealer, or all works contractor. If works contractor was restricted on inputs, they can still enjoy the credit on inputs. Yes, but what is the condition for that? The condition is that such goods should be used for making taxable supplies. You are getting that? What are the credit you are having on the stock? You are exempted under the old law. You have used stock. You have huge credit on that, but you are not able to enjoy. Why? Because your output was exempted. Transitional credit you can apply, but saying that you should use it for taxable supplies in the GST law. The said person should be eligible input tax credit in the GST law. What they are saying is you should have a copy of invoices. You can't just take the stock and just show your credit. You should have copy of all your invoices. Last 12 months invoices are required. They have given you the credit of only the stock pertaining to your last 12 months. You cannot carry all your last 5 years or 10 years stock and say that I will enjoy all that credit. You will be enjoying the credit only for last 1 year purchases. Subject to that you should have a copy of invoice and you would have already paid the taxes on those invoices. Is it a very easy task? And very important is when we are going to see this form, you should also disclose what was your stock. Please understand, not only your credit, you should also disclose in these circumstances, you should also disclose what was your stock on which date. Not on the date when you are filing your transition form. It is the date on, that is the 30th June 2017. So that stock detail should also be mentioned to claim the credit. So lot of conditions they have attached. I think you all are hearing 40% you can take credit, 60% you can take the credit. What is that 40%, 60%? For example, please understand, if I am a manufacturer or service provider, please, I cannot go for this scheme. Please remember, if I am a manufacturer or service provider, I cannot go for this scheme. Then who can go for this scheme? If I am a trader. What is that? If I am a trader and if I purchase from the person who has charged me only VAT, he has not charged me excise duty. For example, if I am purchasing from wholesaler or if I am purchasing from distributor, what generally he charge me? He will charge only VAT. He will not charge me excise duty. Why? Because excise duty is already levied by manufacturer. So as that price is consisting the component of excise duty, you can enjoy the credit of that excise duty equivalent to your 60% of taxes what you have paid under the GST law. Shall I give you an example for better understanding? Yes. Say for example, I purchase cement. I purchase cement of say 100 bags. And the tax on cement is, let us assume it is 5%. VAT I have paid 5%, I am having VAT credit. That cement is already also suffered the excise duty. But my invoice is not showing the component of excise duty. When you buy from VAT seller, they will not give the component of excise duty. They will only give the component of VAT. So in that circumstances, I can also get the credit of excise duty equivalent to what? Equivalent to your 60% of your
CGS.
GST rate. In GST rate we have two components. What is that? SGST and CGST. Let us assume the cement is liable to tax at 18%. Yes? What is the rate on cement? I think it is 28%. Yes. Let us assume it is 28%. Out of that, how much is the SGST? 14%. And how much is the CGST? 14%. So you are going to get 60% of only CGST. Why? Because you are claiming the credit of your excise duty. Not on the whole 28% into 60%. We are confused with this. It is not 60% of the whole GST rate. It is a 60% of only CGST rate. If your rate of tax is 18% or 28%. What in case this cement is liable to tax at 12% or 5%? If your cement is liable to tax at 12% or 5%, in that case you are going to get 40% of your CGST rate. So in this 12%, 6% is your CGST and 6% is your SGST. You are going to get 60% of your CGST rate. Please understand, don't take 60% of total taxes. Take 60% of only CGST. Now what is the condition attached to this? The condition attached to this is two very horrible conditions. What is it? One is you have to make supplies within 6 months. You are getting that? You are able to understand? As a trader, I am taking the stock on this, I am planning to take excise duty credit also. But what is the law saying? Okay, you take the credit, but what is the law saying? You have to file trans to every month. Already 1 month is over. I have to file trans to showing that how much sales I have made of that cement. Only then I am eligible for credit. This stock should be sold in next 6 months. Out of this 100 bags, let us assume I sold only 60 bags. You can enjoy your credit only for 60 bags, not for all 100 bags. Please understand. To the extent of sales made within 6 months from the appointed date. So from 1st July to 31st December, whatever the sales you have made from this stock, only to that extent you can enjoy this 60% or 40%. And very horrible condition is that you should pass on this credit to your customers. So after putting all your efforts in your transitional credit, you should pass on to your buyers. Yes, sir.
How can we transfer to buyer?
Yes, sir.
How we can transfer to buyer?
No, that is what we are waiting for the anti-profiteering rules mechanism. They have come out for the committee. They are coming out with the. That's what I am saying. They are saying that you have to file this trans to every month. What I am saying? Trans to is required in these circumstances. Where every month you have to file showing that how much sales I have made it to my buyer. Then only you can enjoy this credit. What in case out of this 100 tons, I sold only 20 tons? You will enjoy the credit up to 20 tons. What in case in 100 tons I have sold whole 100 tons? You will enjoy the credit of all 100 tons. So subject to that you should make a sale of this tons, then only you will get the credit. This has to be filed in table 4 and table 5 of your trans 2. And where it is IGST payable, it is part of that. Yes?
What revision is the rate? Say before in VAT regime taking steel example it was 14.5, now it is 8%. Can I use this deemed credit to think it and say that since it is liable at a higher rate, that component is a discount kind of a thing for anti-profiteering purposes?
No, that will be difficult. We have to wait for anti-profiteering rules for that. But we have a specific provision in the GST law, as 140 is saying that if there is an upward revision of price, you have to charge on the differential you have to charge GST. You are getting that? If there is an upward revision in the price,
So I'm talking about stock
Credit.
lying with
Correct.
being in the GST regime itself.
and then you can go with either of the option. You can go with deemed credit or you can go with the actual credit.
Existing stock sale order train.
SGST is not eligible, please understand. This is only for CGST. SGST in Karnataka it is not eligible. In Karnataka it is not eligible. Only in some other states it is eligible. In Karnataka you are only eligible for CGST credit, 60% of your CGST credit. Yes, ma'am.
Let me just put it like this. See, I have stock which I bought in VAT regime paying 14.5.
Yes.
Now I am selling in GST division charging 28%.
Yes.
There is already 13.5% of additional tax which I am going to bear.
Yes.
Can I take the deemed credit and show this additional tax which I am charging?
No, that's what you have to see. What will be your deemed credit now? Please, because you should see what is the excise component suffered in your old also. You are getting that? You are looking only VAT component. Also look the excise duty component, what is suffered on that steel, and then you look what is the rate of tax in the GST law. The differential, yes, correct, correct.
So what I do is 28% for the 6 months I take the 40% portion and take the 60% of it. And can I use that difference and show it as additional? Can I use that as passing on the benefit to the customer?
No, we have to wait for that calculation of formula. We can't do on our own. You have to wait for the measurement because we are waiting for the calculation of formula of anti-profit rate. Still they have not come out for the formula, how that formula should be arrived to pass on the credit to your customers.
No, existing tax symbol.
Subsection 3 to textile industry.
140 subsection 3, you were under that 1% or 2%? You have to see because textile also lot of varieties of textiles are there. Some textiles were exempted because you have natural fiber, you have man-made fiber, you have certain handlooms, power looms. There are certain textiles, cotton textiles, silk textile. So we have to look into those respective conditions and then we have to see.
Does 143 and 143 provides of KGST Act has practical benefits?
What madam? KGST Act? See, please understand KGST Act, they have copied from CGST Act.
Correct.
Wherever SENVAT is there, they have removed only SEN. You are getting that? Wherever SENVAT credit is there, they have just removed CE and they have put all other things as same. They have not also looked into what is the actual provision in the VAT law. So if you look this transitional provision in the KGST law, I think because of shortage of time or because of what reason, if you look this transitional provision in the Karnataka GST law, some of the provision they have replicated from the CGST law. Wherever they find SENVAT, they have substituted with VAT. They have not looked what is the impact in the KGST law.
We get only hypothetical scenarios for 143 and 143
Yes.
provisos.
Correct.
Not practical.
Yes. That is only provision and that is only for that is for other than manufacturers and service providers and that is only for CGST law. That is not applicable for GST law. I'll take your question, sir.
No. Existing stock sale ಮಾಡಿದಾಗ so we are losing how the anti-profit will come because they
We will see that. I will see that questions because there is the clause. We'll see what is the requirement in that. Then we will see how they are going to pass on that.
Madam, for the manufacturer, he cannot take the transit rate, madam.
Manufacturer can take. Why can't he take the credit? Manufacturers can take the credit. Only thing is if you are a manufacturer of exempted goods.
Only exempted.
Then
If it is taxable goods,
Then anyway, in your 141 only, in your returns only, you will be having your credit.
Yeah.
Only where it is not there in your returns,
Okay.
then you are applying on your stock.
okay.
You are getting that? If it is already there in your return, don't worry. You are eligible for transition credit. Only when you are not having in your returns, then you have to look for your stock and you have to fulfill all these conditions. Yes?
Excuse me, ma'am, if I am an EOU and I have credit lying with me, what to be done in the new law?
If you are an EOU and if you are having a credit, okay, you can take it. No?
Can we,
Sorry.
that is also trans 1 and...
Yes, same thing. Same form is applicable for all the suppliers.
So, because anyways, even if I carry forward, I cannot utilize. So, in old law, I could take refund.
Yes.
So, here also refund from service tax old department or the...
See, whenever this is a refund, the law has said that you have to apply, you have to go to the old law.
Sir, yeah.
Whenever there is a tax payable, you have to go to your new law. So, in your case, you can carry forward your credit if you don't have anything output. Kindly go for refund mechanism.
Refund in the...
Yes, refund under the old law, not under the new law. Yes.
Okay. Other date in
Many of the exemptions for you are removed now. So, not much difference you will find in that. Now shall we proceed on this? The next important is credit of eligible duties and taxes of inputs held in stock to be allowed to a taxable person switching over from composition scheme. What is that? If I am a composition scheme under the old law, now I am applying for regular scheme in the GST law. So I am eligible for credit. Yes, I am eligible for credit on stocks which is there on 30th June 2017. But what is the condition for that? Please understand. Here also they have used the word only stocks. Here also they have not used the words capital goods. Here also they have not used the words input services. It means here you can carry forward only your stock credit. Your services will become as a cost. For example, I will give you an example. For example, I was a trader in the GST law. Yes. So in the old law, if I am a trader and if I am under the composition scheme, I will be paying only 1%. Yes, I am not having any credit. Now these goods are become liable under the GST law. So in that case, what was happening is these goods I was storing in some warehouse, and I am having certain input services of this warehouse charges. I cannot enjoy that credit in the GST law. You are getting it? I can enjoy the credit only of tax paid on that stock. I cannot enjoy on capital goods. I cannot enjoy on input services. This is when you are under the regular scheme under the old, when you are under the composition scheme in the old law, and you are under the regular scheme in the GST law, or if you are paying taxes on your capacity based or any fixed rate, all these things are applicable in this 140 subsection 6. But what is the law saying? That same condition they have attached. It should be used for your taxable supplies. You are eligible for credit in the GST law. You should have a stock of the taxes, and saying that you should also have an invoice duty paying documents in the GST law. You are getting? So all these conditions you have to fulfill to take a credit. Very important is, please have last 12 months invoices. Only if you have last 12 months invoices, then only you can take the credit of that stock. You have to prove that this stock belongs to last 1 year, then only you can enjoy that credit. How we are going to calculate is not it's the most challenging task. Which method to apply, FIFO method, LIFO method to calculate the stock. Many of us wouldn't have accounted that stock, so it is quite challenging task. But law has given you the benefit. Okay, if you have maintained your books of accounts, you can enjoy your credit. If you have maintained your documentations and your tax duty paying documents, you can still enjoy that credit. What is this? This is composition scheme in the old law, and you are under the regular scheme in the GST law. Many of the works contractors were under the composition scheme in the old law. They were paying 4%. They were paying 4% and they were enjoying the composition. Now no more composition for this works contractor in the GST law. This real estate and all, they cannot enjoy this composition in the GST law. Whereas they were enjoying the composition scheme in the old law. So what they can do now? They can enjoy the credit of only the inputs. What they are saying is, inputs in stock, it can be inputs semi-finished and finished. You tell me as a real estate developer, as a contractor, how I should determine my inputs in semi-finished and finished. Because my contract is a long-term contract. It is going on, it is in process. I have something called as work in progress. Can I take work in progress as my semi-finished goods? Because the law has not used the word semi-finished, work in progress. The law has used inputs in stock or semi-finished goods or finished goods. So as a works contractor, as a developer, when I am constructing this apartment, how I should arrive my inputs to the extent of raw material, semi-finished and finished. It will not be an easy task for all of us to understand this. First of all, to identify your stock itself is a difficult task. On that you have to identify to what extent it is semi-finished and to what extent it is finished forms. So these all informations are required in your Trans 1 form also. So basically you have to understand, if they were under the composition scheme in the old law, they will definitely have huge credits. They will definitely have the huge credits. So how are they going to carry forward? How are they? Because such developers, such contractors, such suppliers should have the documentation. They have to pull all the documentation from last 12 months. What in case if they would have subcontracted to the other subcontractor? Can I say still it is in stock? I have subcontracted to my subcontractor. I said, okay, this construction job you do it, or this electrician work you do it. Can I say it is in stock? What in case if I made a free supplies to my subcontractor, saying that, okay, I am supplying you the cement. Can I say it is in stock? It is not lying with me, it is lying in my subcontractor sites. Can I say that their input tax credit is in stock? Yes or no? Yes, that's what you have to identify. You would have missed all this when you are calculating the stock. So don't see what stock lies with you. Even in some circumstances, you would have sent this stock for demo purpose. say I am a car manufacturer, I would have sent this product, this car for demo purpose, or I would have sent for this testing purpose. So all those things you have to look into inputs and stock very carefully when you are going for this transition credit. Any doubt on this? When I am shifting from, see already we have crossed 33 days, we are left with how many days? 60 days approximately, yes? So we are left with the 60 days, yes? So please try to get all this documentation and supporting information. Somebody was asking me, madam, when we are giving this transition credit, should we also upload all our last 12 months invoices, last 12 months balance sheet, last 12 months trial balance? Not required. Just give the information, but please keep all your supporting documents ready. So once you make an application, at any time you can receive a notice saying that please give us the information, supporting information for your transition credit. So just don't do it on ad hoc basis, it has to be supported by your documentations. Can you carry forward your Krishi Kalyan cess and Swachh Bharat cess? Anyway, it is not excise, not segmentable. So Swachh Bharat cess, no Swachh Bharat from 1st July. Then Krishi Kalyan cess.
Service providing
For service provider, Krishi Kalyan cess is eligible. Take it, at least take it in your transition credit. Don't say that it is not specified. Kindly take that credit in your, because you have said credit carry forward in your returns. Yes. Input service distributor. I think you all are aware that input service distributor concept even remains under the GST law also. They have to go for a fresh registration in the GST law, because input service distributor is only for distribution of your credit, and it is a distribution of credit of only services, and it is not applicable for goods. That is what you have to understand for input service distribution. And the very important part is input service distributor should take a separate registration along with the regular registrations. So you cannot mix up this regular registration with your input service distribution. So now in case if you were under input service distributor under the old scheme, under the input service distributor we were having something called as a registration even under the old law. What I am saying, you have to take a fresh registration in the GST law for input service distributor. Please remember this. Though you were input service distributor under the erstwhile law, you should apply for fresh registration for input service distributors. So in that case, what the law is saying, you can still carry forward the credit of your input service distribution to your new law also with this. They are saying services are received prior to the appointed day, even though the invoices are received prior or post to your appointed date. Yes? You are fine with this? So you can enjoy that input service credit, not irrespective of that. It is a new registration in the GST law. Then one more provision we have, I think you know in the GST law also we have a provision saying that as a receiver, I should make a payment to my supplier within 180 days from the date of invoice. Yes? I should make within 180 days from the date of invoice for supply of goods or services. If I don't make payment within 180 days, I have to reverse my credit and add to my output tax liability. That provision is similar we had even under the service tax law. What was there under the service tax law? That if you are not making a payment to your supplier of service within 3 months, that is 90 days, you have to reverse your credit. For example, I have taken the services of AMC. I have paid him the say 90,000 on first day. You are getting that? I am liable to pay within 3 months. Let us assume I received a CA bill. I have not paid within 3 months, but I am enjoying that credit. So after 3 months, you have to reverse your credit in your old law. What in case if I have received the invoices on June 2017? What in case if I have received the invoices in May 2017? What is the law saying that? Law says that okay, you make payment within 3 months from appointed day. So what is appointed day here? July 1st. So make the payment within 30th September so that you can enjoy that credit, even though the invoice is pertaining to June, May or April as the case may be. Yes? So this 90 days, the provision whatever we are having, don't try to count it. They said that we will give you for this 3 months. If you make a payment within 3 months, you will enjoy all those credits. So if you are making a payment within these 3 months for those CA bills which you are not paid in your old law, you can still enjoy that transitional credit. Yes? No doubts? Whether to pay or not? On one hand you should pay, then second hand you should take a credit. What in case the invoices are pertaining to my 2015 bill? 2015 invoices I am receiving now. What is the law saying? They are saying input services provided under the earlier law. Now I am making a payment. Can I take the credit here? Can I take the credit here? All your old bills. Yes or no? Tell either yes or no. Yes? If you would have reversed because of non-payment of 3 months, then only you can enjoy this credit. What happened? You would have taken the credit. You have not made the payment within 3 months. Now can you enjoy the credit? Yes, you make a payment and take the credit, because law says that you make a payment within 3 months from the appointed day. So if you are able to make payment within these 3 months, you can enjoy that credit. But if you are going to make payment after September, you will not enjoy this credit. So very important is that please relook into that payment of considerations. Tax or duty credit carry forward under any existing law. So all these in circumstances where I was talking on composition or exempted, you have to declare the stock. Now let us look into certain scenarios, certain practical scenarios. Tax or duty credit carry forward under any existing law on goods held in stock on the appointed day. Let us look this provision. I am talking from the transit. Say for example 27 June, the supplier has paid the taxes on that sales and he has sent the goods to you. You have received the goods on July 10, 2017. Is it a goods in transit? Yes? Yes or no? It is goods in transit because I have received under the GST regime, whereas he has supplied in the VAT regime. So for those cases, the law has said that, okay, as a buyer I can enjoy that VAT credit. Yes or no? Though I have received on 10 July, I can enjoy that VAT credit. Subject to that, I account that bill within 30 days from the appointed day. So what is the 30 days for me? 30 days is July 30th. So I would have accounted that credit in by 30th July. If you would have not accounted, please account it so that you can enjoy that credit. Otherwise you are going to lose the credit on your transit goods. Yes. So the law says that very specifically for goods in transit and for service in transit, this says that in these circumstances where the supplier has already paid the taxes on that, whereas you have received the goods in the GST regime, in that case you are eligible for credit. Subject to that, you account that credit within 30 days from the appointed date. So for this, what information I should disclose in my return, in my transfer? They are saying, please give the name of the supplier, please give a serial number, date of issue of invoice, and document on the basis of which you are taking your input tax credit. The description and value of the goods, the quantity in case of goods, and the unit or quantity, what are the tax you have paid, and the date when you have received the goods. So if you have received on July 10th, you have to write that you have received on July 10th. Then by 30th July, you have to account in your books of accounts. Yes? Don't account those bills in August or September. You will lose your credit. So please see that you account those bills by July 30th, 2017 for transit, especially the goods which are in transit. So this has to be given in trans 1. Yes. Now, not in possession of any document evidencing payment of central excise duty. What in case if I am not having the document for paying your the central excise duty? So what they are saying, they will be allowed to avail the input tax credit on goods held in stock on the appointed day, in respect of which is not in possession of a document paying central excise duty. What is the circumstances I am talking here?
Which may not.
As a trader, I am not having a document where I paid excise duty, but still you can take it based on your VAT invoice. So here we have discussed on this 1174. The scheme is available only for 6 tax periods. That's already I have told you, from 1st July to 30th. Any more? This is one more interesting aspect. See, we have something called as 14211. What happens, for example, I would have paid VAT on the transaction under the old law, but invoices I am receiving in GST law, or payment I am receiving in GST law. Should I pay GST again on the transaction? See, I am receiving for example, I think we all are well versed with this time of supply or point of taxation. What are the 3 criteria we look? One is invoice, one more is payment or completion of your services, whichever is earlier. So if you would have already offered the tax under the old law, that is under the VAT law or under the service tax law. Even though you are receiving the invoices in the GST law, even though the payment is received in the GST law, you need not pay GST again on that transactions. You are getting that? 142.11a, 142.11b very clearly starts there. Notwithstanding anything contained in time of supply provision, if the tax is already leviable under the VAT law, or if the tax is already leviable under the service tax law, and if you are already paid under the old law, you again need not pay the taxes under the GST law. Got it? That is only for VAT and service tax. Now there is one more section there. What they are saying, we'll read that section. What they are saying, when tax was paid on any supply, both under VAT and service tax, tax shall be leviable under this act, and the taxable person shall be entitled to take credit of VAT or service tax paid under the existing law to the extent of supplies made after the appointed date, and such credit shall be calculated in such manner. What is this circumstances? I'll tell you. For example, there are a lot of school of thoughts on that, but let us understand this concept, what the law is saying. For example, it is a works contract, yes, where I am paying both VAT and service tax. So what the law says is, if you would have already, I think some of you are aware that many of the builders have sent the mails to their customers saying that please pay the amount in advance so that you will save 4% or 5%. Yes, because the tax rate is 18%, earlier let us assume it was 11%. So what happened, many of the suppliers, they collected advances, even though they have not supplied, but they collected the advances, and they said okay, we will pay 10% under the old law, whereas in the new law we are having 18%. So in such kind of contract, for example, if it is a catering contract or if it is a works contract where you would have paid both VAT and service tax. So as a catering contract or as a works contractor, I received the advances and I paid the taxes on that amount. You are getting? On advances I already paid my VAT and service tax of 10%. But when I am making a supply, I am making a supply in the GST law. So if I am making a supply under the GST law which is liable to tax at 18%, though I have paid 10% in the old law, they said that okay, you have to pay again 18% in the GST law, whereas you can enjoy the credit of 10% as a VAT and service tax, whatever you have paid it in your old law. This is only for the composite contracts where you are paying both VAT and service tax. Now one more example I give you. For example, a catering contract where both I am liable to pay as VAT and service tax. Let us assume that I received advances on 1st June. I received the advances on 1st June. I would have paid both VAT and service tax. But when I am making a supply, let us assume in August 2017. So on the catering contract, let us say it is 18%. Should I pay again 18% on that? Yes? Yes or no? Because law is saying that if you are making a supply in the GST law, you are liable to pay again in the GST law. But is it not that the point of taxation has already occurred in the old law? You would have already paid on your advances, because law says that either of one you can pay, but for composite contract it is very difficult. So they said that though you are having an advances in your old law, but if you are making a supply in your GST law, you are liable to take a credit of only to the extent what you have paid on those advances. You are able to understand, because this information has to be filled in your transitional form. So you have to identify your advances which were actually liable, and you should identify your advances which were not liable but still you collected and paid the taxes. In case which was not liable to be paid but still if you would have paid, then only to that extent you can take as a credit. That is also one more school of thought. Supplies made in the GST. See, you cannot avoid the taxes saying that okay, if I make a payment in the old law, I will not pay the taxes again in the GST law, because law very clearly says that. I will just read again for your understanding that where tax was paid on any supply, both under the VAT Act and Service Tax Act. So I have already paid on that advances. Tax shall be leviable under this act, which is that under the GST Act, and the taxable person shall be entitled to take credit of VAT or service tax paid under the existing law to the extent of supplies made after the appointed date. For example, I paid to the caterer, I paid okay, I want for 2 events. One is on June 20th, one more is on August 15th. To the extent of supplies made, when I made the supplies, I made on August 15th. To that extent, you are entitled for VAT credit and service tax credit, not to the extent of supplies made on 20th June 2017. Yes, that supply should be made under the GST law and not under the old law. So this information has to be given in table level. This is one more very interesting. Declaration of stock held by principal and job worker. We'll see the contents, very interesting actually. Now the most important, actually it is awakening many of the job workers today. Here in the transitional forms, for example, I'll tell you one of the illustration saying that I am a principal, I am sending the goods for job work. Yes? So what is the GST law says for when you send the goods for job work? GST law says that when you are sending the goods for job work, you are entitled for credit. Subject to that, the job work, whatever you have sent for job work should return within 1 year. Whatever you are making the supply to your job worker, whatever you are sending the goods to your job worker is not liable to GST if the inputs are coming back within 1 year. This is the law in the GST law. Now for this transitional credit, in the excise law also we had that the goods can go for job work, subject to that you should receive within 180 days. Now here if you look this transitional credit, for example I purchase certain raw material and I have sent for say manufacturing some product or for doing certain job work. So in that case what the law is today requiring is that on that stock both principal as well as job worker should declare the stock. It is not only the principal who should declare the stock, even it is the goods are lying in the job worker premises, even they should also declare the stock. You are getting what I am saying? For example, I will just give one more example. Say, for example, I have given say textile, let us say as a textile. I have given him a cloth saying that you have to cut into 100 meters. So I have sent him a textile, he has converted into 100 meters a cloth by cutting all this textile. So in that case, he should also declare the stock on 30th June. I should also declare how much goods I have sent to my job worker. These job workers are registered in most of the instances. In most of the instances, job workers are not registered. Unless you are registered, how are you going to file your transitional forms? Because in the beginning itself I said you that transitional credit, if you want to apply, you have to be registered. So as a job worker, how are we going to file this transitional credit? Or how are we going to declare the stock? First of all, how to calculate that stock? And it can be in your raw material, it can be in your semi-finished, or it can be in your finished goods also. So this is the information which is required by both principal as well as job worker.
And in case of the job worker is unregistered, the principal person should show that place as additional place.
No, that is for 143. That is where 143, where they say that when the goods are going from job worker to my customer, then I should declare that as an additional place of business. That is a requirement. I am talking from transitional credit point of view. Yes. The place of business definition is only under the GST law. I am talking from transition from old law to the new law, where I have sent the goods for job work under the old law. That is what erstwhile law.
But still on the closing date of the appointing date, my goods should be lying there.
No, you look into transitional credit form. We will look into that, where they are asking the information both by the principal as well as by the job worker. That additional place of business can be done only in 143, where when I am going to sell from my job worker place to my customers. Here for transition credit I cannot do that. The law very clearly says that whether it is raw material or semi-finished or finished, both the principal as well as job worker should declare the stock on appointed date. And one more is interesting is between principal and agent. I think in the GST law you are aware that whenever there is any supply of goods happening between principal and agent, it is liable to GST. Whereas in the old law, we were not paying any taxes when the goods were going from principal to agent. Either of one were offering the taxes. Now how to handle this transitional credit in the GST law? See, for example, I purchase the raw material. I purchase 100 bags of cement. I have given to my agent to sell those cement bags. Who is having the credit? I am having the credit. Whereas stock is lying with whom? Stock is lying with agent. So the transitional credit requires that both of them should declare the stock. saying that how much stock is lying with the agent, and agent should also declare of this principal how much is the stock on that day. These all informations are required by 30th September. So they say that the conditions are agent should be a registered taxable person, the invoice should be issued not earlier than 12 months, and the principal should neither reverse nor avail input tax credit on goods or capital goods. So here they are going to get both credit on your stock of goods as well as on capital goods. So that's what you have to remember between principal and agent. And please understand, principal and agent concept is only under the state GST law. This you will not find in the CGST law. This provision is only applicable in the state GST law, and it is not there in the central GST law. So this is the last provision of this transition form. We will go to the form directly now. Here they are saying if you are sending the goods on approval basis, possible? You would have sent in May 2017, you would have sent the goods on approval basis. The law says that if within 6 months it is approved, within 6 months from appointed date. So from 1st July if it is approved within 6 months, there is no requirement to pay the taxes. But if it is not approved within 6 months, it will be treated as supply. Yes. So this information also should be given to what extent goods have gone for approval, even in your transitional, so that you can enjoy the credit of the goods which are sent on approval. So this was the section part. Now we'll go to the visible? We'll just go through the content. You are not able to use it? Last. Can you call the office person? I know where he is. I think this is the maximum we can see. You can just come little further if you are able to. We'll look into very important. We'll enjoy this transitional credit form now. Like what are the information they are asking. Let us look into this in detail. First is they are asking as they are calling this transitional form as ಇದು font ಜಾಸ್ತಿ ಮಾಡಬಹುದಾ? Call it as transitional input tax, as well as they call this as stock statement. Please understand, this is called as transitional input tax credit statement also. This is also called as transitional stock statement. This is your trans 1. Please understand, this is called as trans 1. So this form is should be looked for filing your transition credit, and you have to refer to the rules of 117, 118, 119 and 120th of your CGST rules. That is your transitional rules to get all this contents of your transitional credit form. Now first of all they are asking you the registration number. So you can put your provisional registration number and you can proceed. Now nextly they are asking legal name of the registered person as well as trade name if any. There are possibilities that in many of the business you have your legal name and trade name separately, so that way you have to add both your name as legal name as well as your trade name if there is any. Now the next condition, next information what they are asking is whether all the returns required under the existing law for the period of 6 months immediately preceding the appointed day have been filed. It means they are taking a declaration from you only that you have filed all your returns of last 6 months. For service tax, I think most of you would have filed the returns for April, May, June. It is required to be filed by August 15, 2017. So you have to file that return before filing your transitional credit form. So you should file all your VAT returns, excise return and service tax returns for last 6 months. Now the next very important information is amount of tax credit carried forward in the return filed under the existing law. So they are not asking only the amount of credit. They are also asking what is your registrations number under the existing law. So you should give the registration number of your service tax as well as the central excise. Yes. So all your registration number should be added. Tax period to which the last return filed under the existing law pertains. Which is the period you are going to add here? Because you are filing your returns VAT monthly, service tax quarterly, and for the last quarter you would have filed halfly. Excise return also you are filing monthly. Which date you are going to add here? For service tax, which date you are going to add? quarterly, April to June. You are getting? So that's what they are asking. Tax period to which the last return filed. So for VAT it will be that for June. For service tax it will be April to June 2017. Just don't write June 2017. Date of filing of the return specified in column 3. It means when you have filed your return. For example, service tax return if you have filed today, you should write what is the date you have filed your service tax return, or the day when you are getting an acknowledgement from the department. Which date you are going to consider? Date of filing of the return specified. These are the small aspects, but you have to look when you are going to file it. The day when I have uploaded my return, or the day when I got an acknowledgement. Yes? Yes? So generally you have to look that date also when your filing of the return is specified. Balance and VAT credit carried forward in the said last return. Please understand, whatever the credit you are going to file here, it should match with your service tax return. Whatever you are going to file on your August 15th, whatever you are going to file on that date, it has to be matched with that. VAT credit admissible as input tax credit as central tax in accordance with transition provision. What you should write here? Service tax and excise duty credit will go to your central taxes. So write here as central taxes. Whatever the credit you are having, please write it as a central taxes whenever you are claiming the credit of service tax and excise. Yes, sir. Yes, that also. Yes, yes. You can do anyone. If you are having a credit, if it is reflected in any of your returns, you can claim. This is the next very important aspects now. Date of statutory forms received for which credit is being carried forward. I tell you the background of this. For example, I made a purchase from last 2 years. Yes, I made a purchase of cement. Let us assume at 14.5. I don't have any transactions. Let us assume I am making the interstate sales. What I am doing? I am making the interstate sales against 2%. So how much credit is lying? 12.5% credit is lying in my returns. Yes. Now what the law is saying, please give all your statutory forms. Don't upload all the statutory forms of last 2 years. The law is asking here details of statutory forms received for which credit is being carried forward. It means whatever the purchase I made it at 14.5, but I am making a sale against 2% to my buyer should give me all the statutory forms. Once again I will just tell you. For example, in my return, in VAT return, I have my credit of 5 lakhs. You are getting that? In my VAT return, 4.10, I think that entry is there, where you are having 5 lakh as your credit. This 5 lakh credit is pertaining to the interstate sales which you have made against C forms. So you have to give all the details of your statutory C form sales for last 2 years. That is from April 2015 to 30th June 2017. You should receive those forms. You would have already received those forms against that, because you are enjoying this credit of 5 lakhs in the GST law, against which the interest is. Yes, sir. There is one more column for that. Don't worry. For pending, we have one more column. Here they are asking only the name of the issuers. No, if you are not carry forwarding your input tax credit for CST forms, then not required. If you want to carry forward your input tax credit of this 5 lakhs to the GST law, and this 5 lakh credit is pertaining against the purchases of 14.5, whereas you have sold against 2%. So how much credit you are having with your 12.5? You have to prove to the department that yes, I have received these statutory forms against the sales. That's why I am enjoying this credit. That's the reason they are asking you the information. I don't know why they are asking from April 2015. They believe that last 2 years credit, whatever is lying in your returns, that has to be given. So here they are asking name of the issuer will be the person who has issued the C form. Please understand, if I am making an interstate sales to my buyer details should be added here. Then serial number of the forms. Then what is the amount, it is there, and applicable VAT rate. So if I am purchasing this at 14.5, whereas I have sold against 2%, I should write here as 14.5%. Whereas CST I have charged only 2%. Please don't add all the statutory forms received in the last 2 years. This information is required. You have to calculate from your total credit how much credit is pertaining to your statutory forms pending or received. Now this is one more interesting. Here they are not only asking for C form, they are also asking for F form. They are also asking for H or I form. What is this F form? When you are making a stock transfer, you are going to receive a F form. What is the law in the state VAT law? We are having a section as partial rebate and special rebate. What the law says is, whenever you are making a stock transfer outside the state, you have to restrict your input tax credit of 2%. Yes? So out of this 14.5%, whatever the cement I have purchased, 2% anyway I have restricted. So how much credit is lying in my books of accounts? 12.5% credit. This 12.5% credit is against my F form sales. Yes? So this also I have to give the details, how many F form I have received from my branches, and H or I form is applicable when you are making a deemed export or when you are making the sales to a SCJ. So all these informations are required when you want to carry forward your credit against the statutory forms. This is one more challenging task. The next content of your transition 1 form, they are asking you the information of tax credit carried forward to your electronic credit ledger. Here they are asking, for example, I am taking the same example, cement I have purchased at 14.5, I sold to my buyer. He has not given me the C forms or he has not issued the F form. Then in that case, I should show how much is my credit. You are getting that? I should show how much is my credit pertaining to my pending C forms or pending H forms or pending F forms. So all those pending details are also to be added here. Is it very easy task? Is it enough? 90 days are enough for all of us? We have to extract this information. Already we are receiving so many notices from the departments under the old law. In addition to this, we are trying to understand this new law. In addition to this, we are also supposed to fill all these informations. Some of them were saying, no, I don't want this transitional credit only. So many informations. They are asking what is the registration number, what is the turnover on which form is pending, how much is the difference tax payable, and they want this for all forms. It is not only for C forms, they also want for F forms. Generally H forms and I forms we give during assessment only. We don't file it regularly. But still all this information has to be calculated to claim your credit. Yes? What in case if I don't give these forms, your credit will be not eligible. To that extent it will be reversed. It will be assessed under the GST law. See, they don't want to give the credit against which you are not eligible. So if you want to be eligible, you have to give all this information to make them understand that yes, we are receiving the statutory form, so that's why we are enjoying this credit. The next column they require is details of capital goods for which unavailed credit has not been carried forward. This we have discussed on this capital goods. Here they are asking the information for all this invoice document. So please see that you would have maintained the document even for capital goods. They want all those dates, supplies, registration number, how much CVD. Please see that you also add excise duty, CVD as well as SAD component separately here. Don't try to total it up. You have to break from the capital goods, try to get all these three information separately and then say that yes, this is to the extent what you have already availed in the old law and to what extent you are going to avail in the GST law. So both informations are to be given here under the GST law. And then you should say this amount will go to your central taxes. Yes? And if it is pertaining to VAT, you have to take it to VAT. Yes, ma'am. I'll just finish it, then we'll look into that. We'll finish this content, then we'll go for your queries. Then amount of unavailed input tax credit carried forward to your electronic credit ledger as state taxes. So here also, when you are going to carry forward from your VAT return, please fill all your details, how much is your recipient, how much is regarding this capital goods on which credit is availed. So here they are asking the information on capital goods on which it is yet to be availed. Let us see, this is the most interesting one. Details of inputs held in stock for 143, what was that? 143 was, subsection 3 was for, you were exempted under the old law, now you are liable under the GST law. 144B is for when you are doing both taxable as well as exempted. 145 is for transit and 140 subsection 6 is for composition to regular. You getting? So all these circumstances, what you should write? First information is HSN. Morning only we were struggling to get what is HSN in GST law. Even in transitional form also they want the details of HSN. On that stock they want all unit, quantity, value and eligible duties. It is not enough if you just write stock of 10 lakhs or 20 lakhs. You have to give how much is the quantity, how much is the units. Where duty paid invoices are available, let us assume you have the excise invoice with you. So in that case you have to give all these numbers, all these digits, and where duty paid invoices are not available, then in that case you give how much is your total inputs. Yes? You are getting that? Where you are having excise invoice, please give all these information. Where your excise invoice is not there, please give the details of your inputs in total. Amount of eligible duties and taxes in respect of input or input services under 140 subsection 5. This is I am asking you for transit sales. So here they want how much is your eligible duties, how much is the VAT, what is your quantity, description, all those informations are required. This important information, amount of VAT or entry tax paid on input. Please understand, this entry tax we are not eligible. Whatever they are specified here, don't try to take your entry tax which you would have paid under the Karnataka Entry Tax Act. That is not at all eligible to be taken as a credit. This entry tax will be applicable in some other states but not in Karnataka. So here we have to write for all is exempted, and this is anyway not applicable for all of us. 143 is not applicable for Karnataka. 146 is only applicable when you are shifting from composition scheme to the regular scheme. Stock of goods not supported by invoices. So what are the information they are asking? For the stock where you are not able to give your information, they say okay, you give unit, you give quantity, value, tax paid. What else is remaining now? When I am not having invoice, that's why I am asking all this. What they are saying, stock of goods not supported by invoice or not getting evidence of payment of tax, but what information they are asking? You give what is your unit, what is your quantity, what is your value, what is your tax paid. It was more or less it is the invoice only. Yes?
Tax paid
Yes. Yes, sir. Details of transfer of send-out credit for registered person having centralized registration. I think you all are well versed saying that we were having centralized registration under the old law, but we don't have any centralized registration under the GST law. We have a state-wise registration under the GST law. So whatever credit you had as a centralized registration, you can transfer to any of your units wherever you want to transfer within 3 months from the appointed day. So all these details you have to file. How much was your credit in your centralized registration credit? How much is to be carried forward? What are the details of all your units? What are the PAN number also they are asking? Please understand. All your units PAN number is also equally important. I think they will add Aadhaar card also here. Then they want all distribution documents, and this will go to your central taxes. What are the centralized registration credit you are having? That will go to your central credit. Details of goods sent to a job worker and held in a stock on behalf of principal. Now let us see what information they are asking when your principal and job worker is required to be given. For example, I am a jeweler. I have given to my job worker for say polishing. Yes. So here as a principal as well as a job worker I should give the details. What details I should give here? Challenge number, challenge date, type of goods, whether it is inputs, semi-finished or finished goods. Then I should again write what? HSN. Very difficult to identify. First of all the stock, on that I have to identify the HSN code also for that. Description, unit, quantity and value. Who should give this information? As a principal also I should give. And even if a job worker is sending the goods on principal, even the job worker should also give what details? Same, challenge number, challenge type of goods, HSN, description, unit, quantity, value. Job worker will run away now. If you give stock only, it is more than enough. On that you are asking all this information. So it will be a challenging task to get all the details. What in case of multiple job workers we are having? That goods is going in different process. You would have sent to one job worker. I am saying that job worker, please send to another job worker. So which job worker you are going to add here? The job worker, the goods lying with the job worker on 30th June 2017. So this you have to relook into that. Please start working on this. Then details of goods held in stock as an agent on behalf of principal. So here both principal as well as agent should declare. Luckily here we don't have, what we don't have here? HSN is not there for principal and agent, whereas they have HSN for principal and job worker. So here when it is there, they are just asking description, unit, quantity, value and input tax to be taken. You can ask me, madam, whether all are mandatory, whether all the contents are mandatory, whether all the, I don't have quantity, I don't know what is the quantity, I can't measure that, or I don't have units. Is it still mandatory that without this my form will be incomplete? You have to wait for the portal now, because possibly that there are some contents they would have made it as mandatory, some contents they would have come it as a optional. So we have to wait, but as of now the form requires that this all information should be added. Some mistakes are there in this content, but anyway both principal as well as agent should mention. So is it that you should match? Before filing this, please match with your agent. Agent will show 5 lakhs, you will show 2 lakhs. Which credit government will give? Whichever is lower. You understood that? Then details of credit availed in terms of 142(11)(c). This I was talking for composite contract, where you would have paid on your advances. You would have paid VAT and service tax. So in that cases you have to give all these details. VAT will go to your GST credit and service tax will go to your CGST credit. This I am talking on the 142(11)(c), where I said like a catering contract or works contract, where I paid both. So here also you have to give all the information. Details of goods sent on approval basis 6 months prior to the appointed date. So all the goods which you have sent on approval, you have to make a list of that. Please get all the document date, GST number, name and address of the recipient. You have to get, even when you are sending for approval, you should also get HSN classification. Yes? You should also get HSN classification, description, unit, quantity and value. I think everywhere they copied this. Everywhere they copied description, unit, quantity and value. So you should see whether it is applicable or not. So only this much form, very short form, very trimmer form I can say, very trimmed form actually. So, and you have to, I solemnly affirm and declare, you have to only declare that the information given is true and correct and to the best of my knowledge and belief, and nothing has been concealed therefrom. So you should only give declaration now, saying that you should only certify. So we all are self-auditors now. So we should only calculate, we should only do it and we should self-certify, and it has to be signed and uploaded. Signature of your authorized signature. Trans to anyway it is very specific. So trans one is very important. There are many scenarios where you will have transitional credit, like sales returns, like revision of prices. So in that case it will be, your returns will take care of that. You may not give in your transitional credit form. So these are the only informations which they are requiring in the transitional credit forms. Any issues? Any doubts?
Ma'am.
I'm just looking at time. Yes.
Table 5C, this is about pending forms.
Which one, madam?
Table 5C, TRAN 1.
Yes.
Column 10.
Column?
10. I did not get the logic.
Yes. It is illogical. Here they are asking turnover for which forms are pending. Which turnover I should write? Sales turnover or purchase turnover? No, it is not sales. Because your credit is on what? Purchase or sales? Purchase. So it should be purchase turnover. And that is wrong actually. 4 plus 6 plus 7 plus 9. Don't look that. Don't see 4 plus. It will be negative then.
Yeah.
Yes.
Can it really accept like
Yes, yes. It is only a clerical error.
Then how do I maybe auto calculate?
No auto calculations. You have to feed all these informations.
Then what will actually
Yes. That's what you have to calculate the total. You have to calculate, and to the extent it has to go to your credit ledger, to that extent you have to add it. It will match. You have tried it. Anything else?
Ma'am, if I am a manufacturer, can I opt for this trans one?
If you are a manufacturer, yes. So trans one is for everybody. Trans one is for service provider. Trans one is for manufacturer, trader, all the suppliers under the GST law, every registered taxable person has to file trans one. Luckily, fortunately, they are not come for different forms for different providers. They said one trans one form for all kinds of suppliers.
Ma'am,
Yes?
what if we have nil returns in the ER1 and VAT 100 and still we can opt for this trans one?
Nil return in the sense you don't have credit
We
also.
don't have any credit?
Then how you will apply for trans one? Where you exempted?
No.
Then where is the credit?
But we have
Job worker. If you are a job worker, we will have certain processing charges, no, as a service tax. Or if you are not registered as a service tax, then anyway you have to look 143. You will not have any stock also. And for service provider, it is not eligible only.
No, we filed in VAT 100 and central excise is returned, and we adjusted and we have payable in that side.
Okay. Then no question of credit.
The credit is not
Not
payable.
Yes, payable is paid under the old law.
Yeah, old law we paid it and
Yes.
account is.
They are not required. See, understand, it is not mandatory that everybody should file this trans one.
No, but we are job work also.
Only if you have a credit you have to file, or if you are going with any section. Yes, sir?
No, we are a job work.
Yes, if you are a job worker also, and if you are a service provider, you can, if you have a credit, you can still carry forward your credit because it will be there in your returns.
I don't have any credit.
Then where is the question?
No, since it's a job worker, need to mandatory need to.
Only that's what I am saying. Where is not registered? In your case, if he is registered,
Yes.
but he will be having a stock on which you would have been doing any job work processing.
Correct.
So that should be declared.
Only that.
Only that stock has to be declared.
No other question.
Not.
If I am registered in only VAT regime
Yes.
code and not in the excise ban, but I have the excise balance, I mean I have paid for the excise also.
Yes.
Yeah, can we claim?
Yes, yes. As long as you have the invoices, you can claim it. Last 1 year invoices should be
Last
there.
1 year.
Yes. Anybody else? So trans one, hope I've just tried to give the information, content of this trans one. Only when we are actually going to work on this, we might face certain more practical issues in this.
Madam, how
But
about
basically,
that
please understand, yes,
work in progress? How can we buy?
yeah, I understand there are certain challenges. Like, for example, how to arrive semi-finished goods.
Yeah, finished goods.
See, raw material is easy, finished goods is easy. But how to arrive semi-finished goods on 30th June 2017. So possibly you would have taken expert opinion or third party certification to say that to this extent it is a
Content of the raw material casting you can do.
yes, yes sir?
Content of the raw material also casting you can do.
Yes, costing you can do. That's what you have to go with all your costing mechanism, costing formulas to arrive your credits. Subcontractor? Job worker is not filing? Job worker may not be registered also, that's what I am saying. This will be challenges for job worker and principals. Because he is not liable for registration even under the GST law also, let us assume. His turnover is below 20 lakhs. But law is asking him to give the details of stock. So possibly they will make a changes that it should be registered job worker.
In case of chartered accountant, follow receipt basis based on the commission applicable.
Yeah, for a chartered accountant, we had a provision in the service tax law saying that if your billings are up to 50 lakhs, you can go for receipt method rather than paying on point of taxation. So in that case, what the law is saying that, what I believe based on 14011 is that, if it was leviable under the old law, you are liable to pay only under the old law. That is only one kind of relief or mechanism which they have given to the chartered accountant to pay on receipt mechanism.
No, not sales return after 6 months.
But I will receive say in September. Is it okay to not have that as part of the return and still
Yes.
pay the amount?
Yes, yes.
Huge sales return on November is after 6 months. That's how it
There is a specific provision for sales return. If you are making a sales to a registered person, and if that registered person is making a sales return to you within 6 months from the appointed date, it will be treated as supply. And if you are making a sales to an unregistered person, you have to reverse your input tax credit proportionately.
No. So I have sold in June.
Yes, your question is, sir, question is, I would have already claimed transitional credit. Let us assume.
Yeah.
I would have already claimed my transition credit as a credit of say 1 lakh. But that there is a sales return in October. Yes, I would have already filed my return by September. There is a sales return in October. What the law is saying, if the sales return is made by the registered person, for him it should be a supply. You are getting that? So as long as he is again going to charge the tax, I can take the credit in the GST law. So it will not affect. It will not affect. I will take the credit. I am also taking the credit. This transaction credit will go to my electronic credit ledger. I will take the credit.
Department gets double tax.
Why department will get double tax?
No, while selling in the month of June, I have paid the tax.
Sir, he is also taking, the person who is making a supply will also take the credit, na sir. He will also apply for transition credit. It will not be double. Don't worry. Government has very accurately seen that. No double credits.
We have made excess payment of service tax due to some errors. Can we show that?
No column for excess payment. It has to be set up in your returns only. No columns here for excess payment of taxes. That's what I am saying. If you are not able to, unless your window is open, you pay all your old taxes. Yes? Otherwise, you have to go with the GST law. Under the GST law, they will come out column for paying your taxes under the old also. Yes, yes, very clearly the transition provision says that if you have paid anything excess, you can apply for refund in cash. And please understand, you cannot enjoy both the benefits. You cannot enjoy refund as well as a transition credit. If you are applying for refund, you will not be eligible for transition credit. So either of one benefit you can apply for under the GST law or under the erstwhile law. So, anything else? Can you be a little louder, sir? In the returns you are not disclosed. See, there is also a transition provision for revision of your returns also. Yes? Yes, within 6 months if you are able to revise and take it, it is fine. Even though it is forming part of your transition credit or not, you can take by revising your returns also. Within 6 months, yes. You can go it, that's what, see, the law wants to give you the credit. Whichever mechanism you want to apply, you can apply. Yes? With this, which credit? Which credit, sir? Input service credit. Where, which credit? In return, which is there? Which column you are referring, sir? Lot of credits are there here. Which credit, sir? Input service, that's what I am saying. Here 141. It is there in your returns. Here you can add. In 5th column. But if you are a trader, you cannot take it. That's what you remember. If you are a service provider, you can take it. Or a manufacturer. Yes? Yes, sir? Yes. Actually, they have not come out with a specific column for reverse charge. If you look this reverse charge where you are liable to take credit on payment basis, that provision is not there in the transition forms. It is believed that you can take it in transit. As of now, no, it is not correct. But as they have not specified a specific column, we can at least, as of now, we can add it in transit credit. Actually, transit credit is also not correct. But as there is no other column, you can take it in 140 subsection 5. Reverse charge, we don't have credit. There is no column for reverse charge credit. If you are making a payment in July and August, there is no column for that to claim the credit. So possibly you can take it in this 140 subsection 5, where you are giving the information for transit. It is your option, that's what I am saying. It is your option. Either you can go for refund or you can go for transition credit. You can't go for both options. That is what I am saying. You have to decide now. You all have to decide, first of all, whether to go for transition credit or not. And if you want to go, under which mechanism you have to go with. Either refund mechanism or transition credit. This credit will be credited to your electronic credit ledger. From electronic credit ledger, you can adjust against your liabilities.
I don't think transfer, as per transfer, I transfer the returns to go to transfer.
What? As per transfer only. Because the transition credits are in your transfer only. Yes. That's why they are asking the information. This credit will go to central taxes. This credit will go to the state taxes. That's why they are asking that information. Sir, can you be little more louder, sir? I'm able to hear only few words. Can you come little forward, sir? Yes. No, correct. Now there is in GST law we don't have, but deemed export credit can be carried forward. No restriction. No.
Anti-profiting example of this thing.
Anti-profiting we have to wait, sir. Next month, possibly this month, the 5th they are having the meeting, so they will come out with the clarification. Because I don't want to clarify unless it is notified.
What if we are selling the products through the C&F agents all over India? So which column we have to use in TRAN 1, whether it is a 7 or whether it is 10?
7 only, no?
But in 10 also it is mentioned that the details goods held in stock as agent on behalf of the principal.
No, here we are asking where it was not liable to be taxed. 140 subsection 3. Whereas if you look 10, it was liable to tax. It should be liable to tax. Taxable goods. 143 is for exempted.
Then we should file this 10
10
only.
Yes, if it is taxable 10.
Sir, ma'am, what if we have 10 branches and can we upload in one head office?
No, that's what I am saying. This has to be done state-wise.
Both of them have to do the head office and the branch also?
If they are in different states.
Different states?
Yes. No, sir. But they will not give, sir. They will not give. You have to file TRAN 1 because everybody will go to that opening balance. Department has to scratch their head, what is that opening balance? So possibly they will take all this information and then only they are going to give you the opening balance credit. As of now, we are not having that opening balance credit. Of erstwhile law. Opening balance can be of the current law but not of the previous law. Not, yes, we are waiting. Even GST 1 it is in not yet completed. They have just told you to how to upload the invoices. So still we are waiting for the forms actually. Only once it is in operation we can see how it is going to work on that. Yes sir, actually huge working capital will be blocked because of this. That's why you start working immediately on this transitional form so that you can claim your credit immediately. If you have credit and if you have received invoices in July also, still you can enjoy the credit. That's what I said. Within 30 days it has to be accounted.
Madam, any RCM invoices of June?
That's what I said. There is no specific column for reverse charge mechanism.
Paid on July 5. So what is the transition?
That's what I am saying. Paid by why you can take it in old law.
Old law.
But if you have not paid it, then you can enter in 140 subsection 5.
But somebody has we are giving
there is no clarity, sir. There is no clarity. There is no column also for reverse charge. That's why it is creating a confusion. As there is no column, we can add it in 140 subsection 5. It's over. It's done. Yes, it's enough.
Otherwise, we can continue after lunch.
No, it's, I think we are done with that. We have just covered it. Yeah, it's done. No, I'm just, slides are over. Forms are also over. We are just taking the questions. Yes. That's what I am saying. See, we are understanding two different things. One is goods in transit, they said that it has to be accounted by 30th. Or service in transit, it has to be accounted by 32. One more concept we are having as a reverse charge. Yes? Actually, reverse charge cannot fit in goods in transit or service in transit. But as there is no separate column for reverse charge, whereas you have made a payment under reverse charge, you should be eligible for credit. So, as there is no specific column, as of now you can add it in 140 subsection 5. Possibly they will add their one more column later for RCM payments also. Yes. Yes, that's what under the GST law for RCM, in first month you make a payment, next month you have to take a credit. Yes. I think looks to be all are hungry. Yes. After listening on transition forms, I think hunger has increased. Yes, but lot of content, lot of information are required. Start working on that So possibly we can give some credits to the, we can enjoy that credit also, so that we can set off against our liabilities also. Yes, madam.
And suppose a bill was raised in June, paid taxes, bill for services or goods. Now it is returned in August. So how to HSI? We have already paid, suppose say service tax on that bill issue.
Yes.
It is returned in August.
We have, no, that's what I said. If it is returned by the recipient who is registered, then it will be supply for him. If it is returned, actually how service are returned, I don't know. Service can be, yeah, cancelled, you can say. So it can be treated as supply for him when he is cancelling it, or he can reverse his input tax credit proportionately. Yes, with this, I thank you all the members for making this session interactive and informative. Thank you, Hiregange Academy, for this. Thank you.